Well, hello and welcome back. This will be our final discussion on Chapter 1. One of the things that we will take forward from Chapter 1 to all the rest of the chapters we'll study this semester is how to prepare financial statements. And in this chapter, we learn to prepare them from a worksheet. What I would like to do with you then is to review how you prepare financial statements. In this case, from a worksheet. I have provided you with Ramona Castro's opening balances in her veterinarian business, and notice these have been recorded as the first line on our worksheet. Then there are 8 transactions. These transactions have been recorded, each one leaving the balance sheet equation in balance, and then we proved that at the end of the period by totaling at the bottom. And you can tell that it's in balance because the totals are underlined twice. That's an accounting technique we use to show that the math's been checked. We have cash plus accounts receivable, supplies and equipment equaling total assets, liabilities and accounts payable equaling total liabilities, and then beginning capital. As you can see, there were no investments. Minus draws plus revenues minus expenses would equal the total for owner's equity. So assets equal liabilities plus owner's equity. In our example, it worked out. Before we move on, I'd like to draw your attention to items 6 and 7. Item number 6 says we paid salaries, rent, and advertising expense from our checking account for a total of $3,050. So cash went down and the expenses are recorded. And item 6 shows you the breakout. We'll need that later on. And item 7 is a utility expense. So in our worksheet, they've put all expenses in the same column. It's a matter of expediency. So what I would like for you to do now is to take these numbers and to prepare for me some financial statements. So we're going to have you make the income statement and the statement of changes in owner's equity using the best formatting techniques that you know how to use. And it doesn't matter how it comes out, I just want you to try it. So put this screencast on pause and make for me an income statement, which is revenues minus expenses. I'm giving you a hint right now. And the statement of changes in owner's equity, which is the capital account minus draws plus net income, which would be the sum of those two, revenues minus expenses. So go ahead and put this on pause. Make me your best version of an income statement, a statement of changes in owner's equity, and let's give you some instant feedback on how you're doing. So put it on pause, and then when you're done, come on back. Welcome back. That must mean you're done. Excellent. I have for you my version of an income statement for Ramona Castro, veterinarian. Notice it starts with the name of the business, what statement I'm looking at, and the period covered, in this case, a month ending September 30th. An income statement shows revenues less expenses equaling net income, and we have detailed the expenses from transaction numbers 6 and 7. Our total revenue, $7,800, equals what was shown on our worksheet, and our total expenses, $3,220, equal what was shown on our worksheet. Revenue minus expenses equals net income. And notice the good formatting techniques. Dollar signs on the first amounts in each column, and double underlining for the total number. But as you can see, the double underlining had a little trouble when I converted it to PDF. So how's your income statement check out? Let's move then to the statement of changes in owner's equity. Again, first the name of the business, then the name of the statement, and again, it's a period of time. Our owner's capital started at $13,700. There were no investments for the month. Net income, $45,800, was transferred up. We subtracted the draws, and ending owner's equity, or ending owner's capital account balance would be $17,180 as of September 30th, 2020. well, my double underline was there, but it got wiped out when it got converted to PDF. That's all right. We have dollar signs in the right place. And I would have double underlining there, and I do. They just went away. So, how'd you do on your financial statements? Your next project is to put this on pause and make for me a balance sheet. Assets equals liabilities plus owner's equity, and you can see the owner's equity amount right there. So put this on pause, then make me a balance sheet. Come on back and let's compare notes. See you in a minute. Wahoo, buckaroo, you're back. That must mean you're done. Excellent. So, how'd you do? We have the name of the business, the fact that it's a balance sheet, and it's a point in time. The balance sheet is the one statement that shows financial position as of the close of the business day on September 30th, which is what the other two statements showed the month ending as of. And a balance sheet shows assets equaling liabilities and owner's equity, and right off we'll notice our assets to equal our liabilities and our owner's equity. We just pulled the total accounts balances off the bottom of the worksheet. Cash, accounts receivable, supplies, equipment, total assets $29,350. Good formatting techniques with dollar signs and underlining. Liabilities, notes payable and accounts payable totaling 12,170, and then owner's capital, the 17,180 we came up with in our statement of changes in owner's equity, the two totaling 29,350. Our total assets equal our total liabilities and owner's equity. When this happens, I can hear the cheers across the valley. So how'd you do? How is your balance sheet compared to mine? I really hope you stop and put the screenplay on pause and make these financial statements. And it doesn't matter how well you do on them, though of course we both hope you do perfect. What matters is that you engage in the process, because whether you do it right or wrong, you'll learn what the right answer was. There's one more thing I'd like to show you, and it's how the statements integrate, how they articulate with one another. So let's scroll down, and I'll show you the three financial statements together. An income statement for the month of September, an owner's equity for the month of September, and a balance sheet as the close of business on the last day of September. Notice I used my revenue account and my expense account to come up with net income. So revenue and expense accounts have been used. Then I used my capital account and decreased it, the sum of those two, by draws. That becomes my ending capital account balance. So now I've used revenues, expenses, investments, but I didn't have any in this case, and draws. And then I made a balance sheet where I used my remaining assets, my liabilities, brought forward my owner's equity, and it balanced. So in the end, we used each one of our account balances once. The only way the balance sheet equation will work is if you use every financial statement account once. And then numbers are transferred. I want you to notice that we put the income statement numbers, revenue and expense, on the income statement. We did not repeat revenue and expense. We just brought down net income for the statement of changes in owner's equity. And we did not repeat these numbers on the balance sheet. We just brought the number forward. In the 17,180 is the four accounts that are represented in owner's equity. Capital minus draws plus revenue minus expenses. Yeah, doesn't that just give you shivers? It's amazing. Well, this concludes our discussions of Chapter 1, and I'm looking forward to spending more time with you in Chapter 2. Have a great rest of the day or evening, and we'll talk to you later. Bye for now!